Almost everyone has worked a soul-crushing 9-to-5 job where it seemed impossible to get ahead. A minimum wage or low-income job makes it difficult, if not impossible, to build wealth. So what are the methods millionaires use to make money? Hello and welcome back to Finance Guardian channel. In this video, we'll share with you the 7 income streams millionaires have and how the rich make money. Hit that subscribe button and the bell beside it and let's get started. Active income versus passive income. Let's first talk about income, or how money is made. There are 2 types of income, active and passive. Active income is earned by doing work and being paid for it. For example, McDonald's pays its employees based on the number of hours they work, or the work you do in an office may not be tracked. But you are paid according to your output. In most cases, it is like a no work, no pay system. A passive income does not directly depend on active work. Dividends and interest are prime examples of passive income. Typically, passive income involves some active work for which you receive a small payment, followed by the bulk of the income later on. Passive income does not mean zero work. This is a common misconception about passive income. You're still working, but your income isn't directly related to how many hours of work you put in. Owners of rental properties know that it's passive income, but it still requires a considerable amount of work. You should also keep in mind that not all passive streams are equal. How do millionaires earn income? The wealthiest people in the world have essentially 7 streams of income, some of which are passive, so they can earn money continuously. In contrast to most jobs, they do not trade their time for money. Instead, they are innovators and creators. Looking through the document, over the top, How Tax Returns Show That the Very Rich Are Different from You and Me by the IRS illustrates the most significant differences between millionaires and regular people. Let me now go over all 7 income streams millionaires utilize to give you ideas and how you can adopt them. Number 1. Earned income. One of the first income streams for millionaires is earned income, which most people easily understand. Earned income is something that comes directly from your job. It is a big mistake for people to rely solely on their earned income. Everyone has the same 24 hours in a day, and there's only so much that can be done. So how would this work if you already have a job and want to earn more? It might be a good idea to get a job that pays more per hour or take a second or third job. This could also mean working overnights or on weekends. Remember that trading your time for more money should be your goal, rather than making $13 an hour, earn $25 an hour, and work the same or fewer hours. Number 2. Rental income. Your rental income after subtracting your tenant's rents, mortgage, management, and other costs. It is the product of renting out something you own. A rental property could be a single-family home, apartment building, or commercial real estate rented to other businesses. Most millionaires own much of it because real estate is such a powerful income stream. The land is a limited resource and goes up in value over time. Wealthy people understand this and buy real estate in popular locations or up-and-coming neighborhoods because these assets appreciate more quickly. Banks consider real estate a safer investment because there's a tangible item, which is your house or property, and the housing market is usually less volatile. But it is not less at risk because if you can't find tenants or run into hard times, your mortgage must still be paid. Or the bank will just take your home. Those who over-leverage their investment properties build high net worths on shaky foundations. All it takes is one economic downturn or a problem with one of the properties to bring it all crashing down. So if you decide to go the real estate route, make sure you don't take on more debt than you can afford. Number 3. Dividend income. You receive dividend income from the shares you own in a company. These are also known as dividend stocks. It is a passive income source since it does not require you to buy or sell stocks actively. And you're considered a shareholder in the company you own the dividend stock in. For example, you would earn $200 if you owned 100 dividend stock shares, each making $2 in dividend income during the year. You can earn significant profits as you scale up with more shares. Picking the right dividend stock is the key, which is easier said than done. You can also run into a risk of your shares becoming worthless if the company goes out of business. As most dividend stocks yield only 2 to 3%, investing in well-diversified index funds could be a better option since they have higher growth potential. If you're considering investing, make sure you completely understand the investment and consult a licensed financial professional before deciding. Number 4. Royalties and licensing. Royalties are earned from selling one's products. It is also one of the most potent passive income streams out there. You can license the rights to a process or idea so that users can use it for a fee. Ideas and products others create are private property, so you can't take them without their permission. Book authors are the best example of this. To publish a book, an author needs to license their work to a publishing company. It is then formatted, printed, and sold by the publisher. According to the book deal they negotiated, royalties are a percentage of profits the author receives. In spite of the fact that it takes a lot of time for an author to write a book, they can continue to earn royalties for years after publication. This is a great passive income stream with many ideas and the ability to produce products or get patents. One of the main habits distinguishing a wealthy person from a poor person is their ability to innovate and create. Being unoriginal is not something rich people do. Number 5. Capital gains. You get capital gains when the value of an asset you're selling increases. It is a positive difference between the asset's sale price and the original purchase price. Among these are stocks, real estate, bonds, luxury bags, pieces of jewelry, watches, and automobiles. A common way to earn capital gains is to buy properties at a low price and sell them for a profit, or to buy growth stock funds and sell them when they rise in value. There is, however, a tax implication associated with capital gains, so if you plan to sell large assets, make sure to consult with a tax professional first. Number 6. Interest. Money earned by lending your own money to others is called interest income. It is possible to gain interest from a bank, money market account, treasury bills, certificates of deposits, as well as many other sources. Banks are FDIC insured, so earning interest from them is risk-free. You'll get your money back if the bank loses your money on a bad investment because the federal government insures it. Making money in the form of interest is like the money credit card companies charge you or the interest you pay on your mortgage. The money you temporarily lend to others earns you a small percentage. You can also earn interest if you sell a business and the buyer pays you back, with interest plus installments over time. The money you receive from the sale won't be all yours up front, but if you consider the buyer a low risk, this may be something you should consider. Number 7. Business profits. Salaries and business profits are two different things. Your salary is the amount you earn for doing your job. Business profits are what remains after all expenses are paid. Advertising, product sales, and service provision can all contribute to business profits. This is also hard-earned money that results from creating a successful business. The profit tally for a business is determined by the total amount earned during the year. Sometimes business owners reinvest this excess money back into their businesses, but they can also withdraw it as a bonus. Business owners generally wait until after taxes to take a lump sum business profit. And since business profits may fluctuate, it is more conservative to keep the same salary and give oneself a bonus of extra profit instead of increasing the wage and potentially hurting the business. Knowing how many income streams millionaires have shown that having multiple income streams gives you a better chance of surviving a recession. It's also less likely that financial hiccups will derail you. And if you lose your job or a tenant cannot pay rent, you won't go bankrupt immediately. You will be able to enjoy a great deal of peace of mind. The sooner you leverage your time to generate additional income streams, the sooner you will achieve financial stability and security. And that's all the time that we have today, folks. We hope you enjoyed this video, and if you did, please hit that like button. If you're new around here, subscribe to our channel to remain updated about all of our future videos. We'll see you next time.